Welcome back. Continuing with corporate conversations with Stove Kraft now, and the company is surging. The stock surging today after a good third quarter performance. Revenues were up 12%. EBITDA, the margins also expanded from the same quarter last year. To discuss this and more, we are being joined by Rajendra Gandhi, who is the managing director of the company, to discuss the road ahead. Rajendra, good morning. Thank you for joining. Good afternoon, actually. Thank you for joining in. I'll stick to the volume growth bit first up. How has demand been for the quarter? What are the trends that you're witnessing? We are almost, 40 odd days into the fourth quarter as well. How has festive season demand been? How are you witnessing it currently on the ground? And based on that, do you stick to your volume growth guidance for the year?
Yeah, we continue to witness growth. Of course, this is not the festive season. The festive season is generally between the second and third quarter. The fourth quarter is a relatively smaller quarter compared to the last two quarters. But we comparable quarters, we continue to see growth, both in volume and value.
All right. Hi, Mr. Gandhi. Good day and good to see you. When, yesterday, going by the stock reaction, the street expected a little bit more from you in the third quarter because quarter two was good. Could you help us out with what will you end this year with? All right. I think...
I seem to have lost the line.
Seem to have lost that line. We'll have to get him back in just a bit from now. But all right. I think he's back with us. Yeah, he's not yet back. All right. So we'll wait by. So for the time being, Hormaz, I think management sounding a little bit confident with regard to the volume growth number for the year. But we'll have to see what exactly ends the year with. Mr. Gandhi is back with us. Mr. Gandhi, could you tell us what kind of a revenue number do you end this year with? I was just making this point that it appeared that the street wanted a little bit more from you in quarter three. But what do you end this year with? Last year you did around 1,360 crore rupees. For this year, what is the revenue number you look at? And on that number, what kind of growth can you deliver?
So we, this year, of course, historically, we've grown at about 18-19% CAGR. This year, we are very confident of a double-digit growth. And as demand comes back, we'll get back to the historical growth rates.
That's a double-digit can be anything, 10, 12, 15, 19%. What is it? For this year, what should the growth look like? And for the next few years...
Definitely better than 10, and we believe we will be able to, with all the initiatives that we have done both on our product side and the channel side, we are confident to get back to that historical growth rate of 18-20%. But for the year, we are confident of a double-digit growth.
Double-digit growth this year, and from next year onwards, 18 to 20%. Is that correct?
That's our endeavor, yes.
All right. And what about, what is the contribution you're factoring from IKEA? IKEA, I think you all have done that tie-up. So is there any revenue contribution that you'll be factoring in?
It is a long-term arrangement with them. We have set up a facility exclusively to cater to the requirement where they have a global presence, is a large retailer. And this is for a cookware segment. It's a brownfield project. We are developing products as per the design. And this is initial stage of this, the various categories in the cookware that we would want to partner with them. This is a long-term arrangement. And of course, it's good for the company, both in terms of revenue, but not limited to revenue. There is a good contribution coming from them with their participation in our automation program, in our manufacturing excellence. And the
Mr. Gandhi,
program.
Yeah, Mr. Gandhi, we have gone through the press release and it appears quite an interesting, development for the company. But we require two numbers. One, how much money are you putting? Two, what is the revenue potential of this? And by when you'll get there?
Number one is the plant is already ready in terms of the civil structure, and we are putting up machines there. We would invest about 15-20 crores additionally on the machines. On the revenue, in the long term, there is a good potential to get to about 200 to 300 crores in the next 2 to 3 years. Initially, of course, the supplies only will start in the fag end of this year, around the October-November period, because it's a development stage now.
And by when does this start to contribute to your revenue? You mentioned that there is going to be good revenue contribution. Next year, by FY26?
Yeah, FY26 is a full year for the revenue.
And does that improve your margins as well? The third quarter, you are at 10%. So in this 10 to 12% band, does that improve your margins significantly as well?
No, the margins are on the similar range, but there is definitely overall for the company, as we grow, the operational leverage will give us additional advantage on the margin. We'll improve the margins from here.
By how much? what should the margins look like? There has been some improvement.
Wow.
As of the last quarter, you have done around 10%. For quarter four, what should the margin? Quarter four margins will be better than quarter three.
For
Could
the
you
year,
clarify on that?
for the year, we should end up a little lower than 11%. Our endeavor was to deliver 11. We would be at a notch below that 11. But going forward, we believe as we grow from here, we'll be between that 11 and 14.
11 and 14%. That's quite a big range. So for the next year, we should at least factor in 100 basis points improvement from little lower than 11 in FY25.
We believe we can deliver that.
Okay, all right. In the past, you mentioned with the capacities that you have, you could potentially double your revenues. By when do you think you'll be able to achieve that? Because as you mentioned in the past, that capacities are not a problem. The problem is that, in fact, demand needs to pick up. And now you've got a booster shot that's coming in from the central government as well. So by when do you think you can achieve these bigger numbers that you were talking about?
Yeah, we should be able to double the revenue in the next 3 to 4 years.
Double the revenue in the next 3 to 4 years. Right. Mr. Gandhi, you had launched a new personal care product line as well this year, starting like hair dryers and trimmers. What kind of response have you received so far?
The initial response is very good. We have just launched it without any marketing effort on the e-commerce platforms. For the short, near term, we'll be only on the e-commerce platforms. Once we get good feedback from our consumers, and when we start manufacturing, we'll then take it across the various channels that we operate.
And how much do you expect it to become a part of your business, say, over the next 2 to 3 years?
It's too early to comment on this category. We are excited with the initial response. Definitely, there's a huge potential in this category. With the BIS regulation setting in, there's a huge opportunity for people who manufacture these products. If they can deliver a high-quality product, there is a market in India.
Okay, all right. And just a final question before we let you go, I briefly asked you about the government of India putting more money in the hands of consumers. And it appears if I compare you with your competition on a much smaller base, you have been growing relatively better. So do you believe there is a good amount of opportunity for you out there because of this additional money in the hands of the consumer? Could help us out with that. And as of now, are there any signs of slowdown?
Not exactly, but there is not that high demand situation that we have witnessed during the COVID and post-COVID, immediately after the COVID. But in the last 1.5 years, there has been a softer demand compared to the base that was set during the COVID. We expect that the demand will come back. But your question on the outcome of this budget, we believe that when it leaves more money in the hands of the middle-income group, that is the addressable group that we address, it could be a huge advantage for us.
All right, Mr. Gandhi, we hope that it's an advantage for you. Good luck for the road ahead. Thank you so much for sparing time and joining us this afternoon. As the management there of Stove Kraft, expecting demand to pick up post the budget and confident of double-digit growth in FY25.